Good morning and happy Mother's Day. I guess it was yesterday, right? Just yesterday, we went over the bigger time frames and we were just suggesting, hey, let's pay attention to price action here. Patience in this type of area isn't a bad thing because most likely, if you're going to see some direction, you can get pullbacks to really grab that, or you can see if we're going to break down and look for that kind of price action. Just be nice and patient with it. But today, for us who don't want to be patient, right, we're going to go into those shorter time frames. For us, maybe, and some of us are degens out there, but we're going to go into those shorter time frames. We're going to be looking at the 2 hour and 30-minute chart, and I'm just going to have to hop right into it. I'm going to try to do this in one shot, and so I'm going to try to take it a little bit slower, but I didn't want to make some big, massive video. I think we should be really spending time with the mamas. So let's just hop right into the 2 hour chart and get you guys the weekly expected moves to start off. Okay, this is thinking very simply is going to be the theme still going throughout this area. 580.12 to the upside, and we have 548.56 to the downside. Just because we do have a decent amount of new people in here, we do want to say this is a 68% zone. This is not a 100% zone. 32% of the time, you will close outside of these lines. And if you squeeze, a lot of the time, squeezes are unexpected. Squeezes take you through these type of levels. So on Patreon, we did give you the second standard deviation for the week. And the same thing can happen to the downside, right? If you break these type of levels and you start breaking down dramatically, a crash or a bigger down drop, some kind of news that is overall bad and a terrible reaction from the market will take you outside of those zones. So we'll look for those moments. And you are still in the type of area where this could be consolidated to continue what? Well, the squeezing that was happening. So immediately we're like, okay, we could get outside of this week. But a lot of the time I call this decision-making areas, meaning if I get here, I'm not getting greedy. This would be a great trade, and that's what we're going to talk about first. Then we'll get into daily expected moves after that, right? So for the SPY, if we think very simply here, we have what? Rejection divergence. But we did see the pathway higher if we don't lose some key levels. So we need to talk about a few things on the 2 hour. If we actually shoot down to these type of levels, there is risk that you could see that roll type of moment, but there is also risk that this is some kind of fake out, as the 2 hour would still be positive. Even if we end up down in this downward direction, that wouldn't even be losing this low. We really don't want to lose this low early in the week, in my opinion. I think we would rather see maybe that small pullback to a daily move and then up, or just up right away, and more so look at for that bullish kind of market, right? Where you see a rip, they sell the rip, but you don't necessarily break the previous low. Then you see a rip, they sell the rip, but they don't break the low. You see a rip, and then they don't break the previous low, right? That's more the type of thing that would shape up in a bullish or even squeeze-like scenario. Squeezes more times can go like sideways. So we'll see what happens. We haven't necessarily seen anything to jump onto as of this moment, but I would totally understand people being at the middle of what would seem like a consolidative almost range at this point and making a decision either direction. I think it makes sense for either one. I think it makes more sense as you're at a bullish tilt to be on the bullish side, but hey, to each their own. So if the 2 hour chart, whether it's here, whether it's all the way down here early on in the week and we see something crazy, we do want to watch out for that. Something unexpected on a Monday is something you want to watch out for, right? That's how we start the rolling. We'll see if it's able to curl up into what positive territory and violate where. This point on the RSI, aka making a new high, would be a fantastic thing. Invalidating any kind of rejection divergence, invalidating the divergence on the RSI would be a good thing. So if the 2 hour chart is able to curl up early on in the week, you can easily see that move getting to that weekly expected move. Now we have a daily move that would just say new high, look for the rips to get sold and keep heading in that upward direction if we keep trend. If we start to see worse things, right, this would still be perfectly fine for us to turn back up and see that hit the top side weekly expected move. But when we actually start to break down to this weekly move, that's where it gets a little bit more risky for the 2 hour. So just some things to be aware of at this point. We can go into the 30-minute and just pay attention to the fact that hey, this is holding up. Where is the 30-minute MACD? It's right by the center line, right? This is when we're looking like, okay. Is this just a pullback? I would have to argue that this is pretty spaced out right now. And these little divergences down here, I think matter a little bit more, almost a flat divergence down here. Very, very interesting to me. Very interesting behavior from the RSI, just pointing in that upward direction while the kind of just coming down. So I think I'm reading into this like, hey, well, what are we right now? We're still bullish, and this was just a pullback. That's all we can say at this point. Sure, we have that 2 hour reversal signal, but we haven't seen the signs. We haven't seen the breakdown that says that reversal signal is going to lead to downside, right? So The pullback here took you to that 5-day moving average. Where do we gravitate to a lot of the time when you see upside? Well, we see an upward move. You kind of do this sideways, very choppy price action to go into that 5-day. We lose it, and look at that savior come in. That's why I think really you don't want to lose this, but I think the market was overall saying, or maybe it was the algorithm saying, you do not want to lose 544, 545 again. That's all I'm thinking there. For the time being, though, it looks like just another test of the 5. If we start to break below that, we will be live tomorrow morning. But if this 30-minute curls up, where would we be looking? And that's where we talk about daily expected moves. 572.57 to the upside, 556.11 to the downside. Once again, a 68% zone, 32% chance to close out here if we see something that is kind of unexpected, right? So really how this would move right now would overall say if we curl up into positive territory, you are very likely to make the new high, showing you the pathway higher. And then what you don't want to happen next is some kind of rug pull type moment to lose this at this point, because that starts to add some credibility to, oh, we're going to use this type of level to break down. What we would like to see in this area is good bull market behavior. Genuinely good bull market behavior is, hey, we see that rip go to the upside, then we see that kind of pull down. Then we see that make a new higher low. Then we can go to higher prices. And then around here, I will be looking for some kind of 30-minute divergence towards the weekly expected move. So I'll be paying attention to these things, right? And even in this moment over here, right? Even if we make a divergence, you're still paying attention to what? If we lose the low. Because if you come down into this area again, you just bounce off it and you continue, you can keep going for a long time, right? This is the type of market that people try to short. And at the same time, you know that it's kind of like, it's hard to short. Because if we just keep curling up, the market can remain irrational for longer than you can remain solvent trying to short something like this. That's why we're seriously talking about how it would break down. How it would break down from these type of levels would actually be you would get that reaction to the daily expected move, or even through it, right, if something unknown. But if you go to that daily expected move, this would be a good area to see if you're going to get that snapback kind of moment. Because if you don't get a snapback kind of moment and you use the 5-day to reject, right, we come back into this block, you curl down, you come back into retest, and you fail, that is how you end up lower. Now, all of these things can still be a bullish way higher, but you start to open the door to downside, okay? You start to open the door to downside with this. So I'm not necessarily leaning towards this at this point, okay? I just wanted to be clear with that. But if it shapes up, we will talk about it live. We will be live in the morning on YouTube, and we will be live all week long in the morning and in the afternoon for the closing hour of the day, power hour, if you will. Let's go over to the Qs just to get you guys the key levels. Okay, so right now, once again, that test of the 5-day, what do we gravitate to? 5-day. Once you see big moves, you go to 5-day. See a big move, go to 5-day. See how you can lose it, but it's more what happens around there, right? If we would have lost it, used it here as rejection, and then turned down, like here, this moment here was a little bit risky. You come down, you reject off it. Oh, it's going down, now down. We lose the low. It looks really bad. Oh, it's FOMC day. Okay, some cheeky things for FOMC day. Let's get you the daily expected moves first, because we're going to talk about this 30-minute chart. 495.91 to the upside for the Qs. 480.03. Once again, 68% zone. Okay. Is the 30-minute positive? Yes. Is it curled up? No. So if you start to lose these type of things, maybe you go fill that gap, right? Remember that gap's there. We could see some kind of little trap in here and then head to the upside. But the main thing here is just, is that 30-minute able to curl up into positive territory and solidify kind of a higher low from the previous? Then we would have a new point to pay attention to. We could maybe get to something like 495. If we get excited, that would say decision-making area for Monday is up in here or down in here. And that would overall be good for the market. Sell the rip, make a new higher low, sell that rip, make a new higher low, and keep that upside until we potentially have a bunch of divergences up here. And then we will start to talk about how the risk is getting higher and higher up here of some kind of drop in the next few trading sessions if we see something like this take place. Once again, how it likes to break down, well, we would go down to this side, you'd see a retest of that 5, and then it'd probably break down to the weekly expected move, which once again just opens the door for bad things to happen. It doesn't mean bad things have to happen. It means some bad things are shaping up, and we're about to maybe test critical levels. And if we're testing those critical levels, you got to be aware of how that would break down, right? Another roll to the downside would be a bad thing. So a big buyer would have to step in down here. That's where we're going to look at the 2-hour chart. If this rejection divergence does matter here, and we're going to, and the momentum is saying, hey, we're weak and we're about to get bad news, well, then you're most likely going to lose this low. And it really depends on, do we react to here, right? Do we just react to here, or do we see it come below those type of levels to go to like 466? You get some kind of bounce to retest into this type of area, and then you actually reject off. And this is the actual time where hey, we're heading into a downtrend. All of this up here was a trap. Okay, so now that we're aware of the bearish thing, that's once again going to take some time to shape up. You are not in that kind of trend right now, so that's just something to be aware of. We can look at those weekly expected moves. If you're looking for downside, 471.99. If you just hit those type of levels, you don't come down to 466, then the door really isn't fully open to downside, but it is a way for it to break down to there over time. So just be aware of it. For the 2-hour to the upside, for 503.95 to the upside. Very, very nice. Now, what you want to see from this 2-hour is if that curls up, you kind of want that to get rid of all of these things. So we actually, weirdly enough, if the best way to get rid of these is see a rip on Monday. See a rip on Monday that takes the RSI to violate all of what's going on here. We kind of hang out up there throughout the day. Then you see it come back into that move, maybe even fill the gap on, say, Tuesday or Wednesday, and then you're able to extend that into Thursday, Friday time. Okay, and what we'll look for is if we set up 2-hour divergence towards these type of levels for the Qs at this area, because I think in this area, we are still going to see a mean pullback, maybe even right after options expiration. It could extend longer, so we have to see how the price action actually shapes up. But this is still just, hey, this is bullish context, right? It's a reversal signal with a little blip on the MACD, so it is kind of at the same time. So it is something that says the weakness and momentum is here, but we haven't seen the loss of price to really dictate, like, yeah, that's going to be bad, right? So if the 2-hour can remain positive, even if it comes down into these type of areas and curls up, even if it comes all the way down into here and curls up, it's still going to be okay. We're looking for whenever that 2-hour can curl up into what? Positive territory, because that's when you're very likely to make a new high, violate divergence, and have to make completely new signals later on. Okay, and you could see something like this right over here. And this one would be much more risky. Going into Friday and making something like this would be much more risky in this area up towards the what? The monthly expected move of 514.24. So we have a lot of things to pay attention to. I did notice that the PCC was overall pretty damn bullish. So pretty bullish PCC, CPC, which means a lot of people taking some calls into the weekend from what we see. So maybe see a shakeout early on Monday. I think that'd be interesting. Come down, fill this gap, tell people, hey, yeah, we're heading down, down, down. Maybe we even hit a daily expected move, and then we can see if that thing's able to turn up into positive territory. That would be great. Volatility for the time being, as we look at that, you just notice where are we going to? We're going down to that 2151, but I wanted to show you on the RSI how it's just barely holding on. So if we see positivity, one, I want to potentially be paying attention to what? Well, we already filled this one, but we have a few more up above us, don't we? We have a few more up above us. I just accidentally drew over there. This one right here is the one that I really think will definitely get filled. And then this one I think might get filled later on, possibly later on, right? This is more the gap fill that if we see a surge in volatility to 37.42, you might see the SPY breaking down through these type of levels, okay? If we see that much volatility come in and be looking for those rips back and forth. So a lot of things going on over the weekend, but the main thing for today is, hey, just treat mama well first, right? Celebrate Mother's Day first. Pay attention to your risk and stuff like that going into the week. Maybe make a plan for if you already have a trade set up. And for the time being, I am in Apple calls, right? My Apple calls here. 2-hour was able to curl up. 2-hour can easily pull down right here, right? We're still reacting right to that 5. We can reject, but for the time being, you're really bundled up. So I kind of like the structure in here. We can kind of see how it wants to head higher and understand that, hey, if this 30-minute crosses down, it can go revisit those lows. And I have weekly expected moves over on Patreon for Apple. So that's just great. I can really dictate how I want to play this throughout the week. I am choosing to assume some more risk and just really, pay attention to this low for the time being. And overall, that means I have a pretty loose management of the trade, right? Normally, if this curled and went negative, I would say I'm out, but I think you could go for a test of 196 and just curl back up. So A lot of this is going to be dictated on personal preference when it comes to risk. And so I wanted to share kind of my plan was just, hey, if we're losing this low, that's what opens the door to worse things. Even if it makes something here, I'm going to seriously be taking into consideration like, hey, I don't like this look from Apple anymore. I don't have to play Apple. I can look for another opportunity elsewhere. Maybe look how the SPY is shaping up. So I wanted to share that with you guys today. Thank you guys so much for watching this video. I know it was a slightly quick one, but I really just wanted to make sure we're getting through the SPY and the Qs, getting some fresh ideas of how price would like to move throughout the week and little areas where we could see if we want to react, right? Get these key levels. That will be very, very helpful. So thank you guys. Shout out to the moms out there. Shout out to the dads doing nice things for the moms. Shout out to the sons doing nice things for the moms. Shout out to the daughters for doing nice things to the moms. Let's show some appreciation today and then get geared up and ready for tomorrow, all right? Where I will be live right here on YouTube in the morning, and I'll see you guys then. Peace out.